askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is a special askSlim Market Week. It's a look back at what happened in the markets in the last week and a look forward at what might happen in the next year. Yes, crazy it is. This is the 2016 predictions that I'll be doing in this show, taking accounting of some things that I said in the last year and document what I think is going to happen in the next year. As far as this week, well, it's been a slow trading week again for the holidays. Some big moves in there. Stock market swinging back and forth. S&P 500 going on both sides of the unchanged level for the year and continues to do that just as we wind up in the afternoon here on Thursday on the 31st. So right now, as I look at it, well, we have the S&P 500 actually down on the year by just a few points, and the Dow Jones Industrial Average down about 1.5%. So question is, does this break the rule of five? Whereas these small declines here count for a losing year. You know, all the years that end in five supposedly are supposed to be up years, and this year, well, basically flat to slightly lower, depending on which index you look at. But even now the S&P 500 slipping down to the minus side. We'll see how that closes. Gold, silver, very choppy for the week. Big down years, of course. And oil, the same thing. Price basically cut in half for the year. And so a bad year for commodities. The dollar, which has strengthened by a little bit this week, has basically in the last months been gyrating back and forth. In this last year, Q1 was really the big year for the big quarter for the dollar, as it had a big move to the upside, but then hasn't been able to make significant ground after that first quarter rally. Bond market, well, it's been moving up and down also, and we'll say that for the year because it had a good size rally early on, but then pulled back. If you look at the TNX, which is the 10-year yield, we have 2.18 as where we started the year, and 2.28, just 0.1% difference, as about where we are ending up for the year. So here we are with some of the markets moving pretty significantly, big declines in commodities, and the bond market and the stock market ending up, well, with not very big changes on the year. Before we get into the rest of the show, I want to remind you about our new offering. That's Rankings and Setups. What we do is take our 70 best symbols, that's our best trading stocks, how we measure for kind of high cap stocks and stocks that have good option volume. Also ETFs and all of our futures makes up 70 symbols, and really don't need to trade anywhere out of those symbols if you're an active trader. And you can see our rankings and setups. We're in a no-cost trial period right now, which will continue into the middle of January. All you have to do is go to the askSlim website, go to the resources tab at the top of the page, and just the first pull down is rankings and setups, and you could see how we have that set up. And most days we put in trade setups, and we have a beautiful table there of rankings on 3 different time frames: long term, intermediate term, and short term. I think you're going to find it incredibly valuable, so go check that out. All right, so let's take a look at what happened in this last week as we look at our 60-minute chart of the E-mini S&P 500. As we see, we have 4 trading days as we get ready to wrap up the week. The gray area that you see in here is the overnight trading, and the white area right over there is actually the trading during the day. So what happened in this week? Well, on Monday, we saw the markets opened up kind of flat, but then turned down overnight. That's the overnight market. Opened lower, but then had a good size reversal and came back, and actually most of the losses it had overnight and early morning, it did get back. Eurozone was mixed. China led the way down. Oil was weak, and Russia blames the Saudis for, well, pumping a lot of oil. But if you read the news, Russia is also pumping at a record rate. The increased production is about 1.5 million barrels a day. That's big for a market that has a lot of oil out there. Also, the oil stocks led this retreat, and then, as you can see, came back during the day. MasterCard said holiday sales rose 7.9%, so that was good news. And this is big news in here, and this is going to come into my focus as I talk about stuff for the next year, as Amazon signs 3 million new subscribers in 1 week to Amazon Prime. Massive there, and of course the Amazon stock has been doing fantastic. On Tuesday comes, and the Eurozone leads on the way up. CAC 40 is up 1.5%. The DAX up 1.6%. Asia with small gains. Home prices up small. That is existing home prices, 5.5% year over year, which is a slightly stronger one it's been, but the news on home prices later in the week is not that good, and consumer confidence is stronger. So this is kind of the best of the news on the week. You can see the stock market here moves up overnight and then continues to move up and makes its high of the week essentially on near the close here on Tuesday. Wednesday comes, oil reverses on the downside and it weighs on the market. Eurozone down about 0.7%. Asia was flat. Then there's this talk about New Year's terror threats, which becomes a big issue. Belgium actually cancels its New Year's Eve fireworks display. And pending home sales, a surprisingly huge, more than 10% drop. And U.S. stocks stay under pressure all day long. You can see that in here. Overnight on Thursday, well, not much goes on in there. Eurozone stock markets mostly closed. China was down about 1%. Chicago Purchasing Manager comes out very weak. You can see that 42.9 versus an estimate of 49.8. That really points to some kind of a slowing in here. Oil was weak early and reverses and then reverses. U.S. stocks lower, reverse, make it all the way back to unchanged, and then ease back again. And this you can see in here as the markets open lower. Oil was down over $1. Oil reverses to up $1. We get a big rally here in the S&P 500. Then oil reverses on the downside again. Well, didn't quite make it to the downside, but was up about 30 cents from up over $1. And you could see the stock market moves back down. So stock market very attuned to the oil markets, and it likely will be continued to do that in coming months. And of course, here on Friday, the markets are closed for New Year's Day, and that will be a welcome, a fun day for sure. So let's take a look at the calendar for the coming week, and we will see that the let me get my calendar up here for you to see. And here it is. It's a look at the earnings and also the economic calendar for the week. And here we go, and you can see that right there. So generally, as we get into the beginning part of a quarter, there's not much earnings reports. The big onslaught comes in the beginning, at the end of the second week, when after Alcoa makes its report. And what we can see in here is that on Wednesday coming up, we have Monsanto earnings. And then Thursday, KB Home, Schnitzer Steel, and that's Walgreens Boots. That's before the opening, and after the close, we have Bed Bath & Beyond. As far as the economic calendar goes, news coming out, well, all of these tend to be somewhat important, but when you get to the first trading day of the year, I mean, it gets crazy. Anything can happen. And the first few days tend to have some big days, so we'll see. PMI, ISM coming out on Tuesday. The big Wednesday report coming out will be the FOMC minutes. We already know that they raised interest rates, so we're just going to hear their discussion about it. Not that big a deal, right? But we'll get some idea about maybe moving forward. And then Friday is the employment numbers right over here. You could see that, and that always is a market mover. So that is the calendar for the coming week. That is it for the first segment, and we're going to be back with our special as we look at what might happen in the markets going forward. Be right back. So before I get into the predictions for the coming year, let's talk about last year. I really always want to be accountable to what I said whether it be for the coming week or for the coming year. But you got to be really crazy when you're looking out a year in advance and think you can get pretty right on that. So many things can happen during the year and really change it. I look a lot on themes and valuations and really get a sense for the charts when I do this work. So it's if the themes are wrong, then some of these things are going to go haywire. And I would say that's what happened to me as far as stock picking goes this year. I normally do well as far as stock picking. I would say most years I beat the markets pretty handily. Not this year. As the theme that I was really looking at was a change in the markets where the commodity markets do a little better, especially second half of the year. Well, as we know, that did not happen, and therefore the commodity-based stocks, which I had in my best 15 stocks of the year, they did really poorly, and they led the way down. Now, I got to say this fast because it hurts too much, and that is, of my best 15 stocks, only 4 were up, 11 down. That is a poor performance, and again, basically blamed on the fact that I thought commodities would do better in the second half of the year. The gold chart, I thought, was going to bottom in the second half of the year and have a rally. I'll talk about that in a moment. And as we know, a rally did come at mid-year in gold, but that failed and moved down pretty significantly. Oil did the same thing, moving up the middle part of the year into June, and then it failed again really hard. So where I got it wrong was that second half, where we just had this huge softness in the commodity markets. My best call of the year clearly was in the refining stocks. MPC, Valero up 37%, 42%. They were, my anticipation was that even though I expected some rally in the oil markets, the refiners were kind of underpriced based on their margins, and I thought that we would not get any rally in oil that would really hold all that well. So they were good calls, and they were up pretty significantly. The worst calls were in actually the technology category. How could you miss? But I did. I thought Micron, which was really doing a great job in turning that company around, was going to have a good year, really doing well in mobile and getting their a line of semiconductors in really well positioned. That stock did really poorly, loses 60% on the year. Could be we'll get a turnaround here and there, but I'm not going to pick that stock this year. And Western Digital in the hard drive category, I actually thought that they would do a good job converting over to a lot of the solid state drives, and while they might have done some of that, they lost 45% on the year. So that was the kind of the best and the worst. Now, in the stocks that were my favorites, which were GDX and Silver, of course, both of those down on the year, as the second half story that I had seen a year ago did not come to play. So they were down over 20%, both of them. In the group of the riskiest stocks for the year, I had picked 18. This one, well, better, even year and even there, as I was 9 and 9 in there. It was an odd year as far as those pick goes. Of the stocks that were down on the year, 2 of them got bought out. So it tells you how bad they were as far as how low they got. And of course, they got so cheap that KLA 10 Core, and SanDisk got so low that they were interesting as far as takeovers. So KLA 10 Core, which was down 39% on the year at one point, finishes down 1% at its level of buyout, and SanDisk finishes down 23% after having been down 55%. So those were some good calls, and even ended down after getting taken over. Interesting in there. Best calls on the downside were Chesapeake, which was very clearly in huge liquidity problems, and it was down 77% on the year. APC in the natural gas category, which I thought was going to be under pressure, ends up down 41% on the the year. So you could see some really good calls as far as that goes. And of the worst call, I mean, clearly the standout worst call in there is Netflix, NFLX. That one is up 134% on the year, as everything has gone right for them as far as subscriber growth and anticipation of international growth. So they did much, much better than I gave them credit for. But I'm going to talk about that stock again in a few minutes. So that is kind of a wrap up for the riskiest 18 stocks of the year. And basically, I was just neutral as far as that goes. Some good picks and some not good picks. Interesting, in the bad picks, in the good picks, stock that broke pretty big was Sears SHLD, and I'm going to be naming another one of these broken down retailers in a couple of minutes. As far as the markets went, I expected gold and silver to move up and have their highs in the first half of the year. And then the levels that I picked for them were, pretty close. I just kind of missed on that, and then I expected some pullback, and that first half of the year high and pullback just was it for them for the year. And I was really wrong in the second half, whereas I thought, after some mid-year rally and then pullback, they would do really well at the end of the year, and that didn't happen. So that's really where I got it wrong as far as the stocks go in that group. Oil market, I expected that the low would be in the first half of the year. Now, we know that didn't happen. But the low that it made in the first half of the year, I had predicted it around $48. It actually broke down to about $42, a little bit below that. I expected the high to be in the second half, and I was looking for 66.50, and it actually got to 62.30. So I actually didn't do too badly on the prices in the first half, but in the second half, again, commodity market's so weak that it was a bad miss in there. The bond market, we saw a low that came in March, and I was looking for a low in June. Now, I thought the low would be around 120.10. The actual low was 124.13. So not too far off on that. I thought it would make a high in the fall as far as the 10-year notes go, and it actually made the high. I expected 131, and it actually got up to 129.15. So pretty close as far as the bond market goes. The dollar, as far as the dollar went, this was clearly a factor in my missing on the commodities, is because I expected the high in the summer around 92.50. Well, we know that it rallied all the way up over 100, and that was the main big driver as far as the weakness that we saw in the commodity market. So big factor there, and a big miss for me on the call on the dollar. Now, my clear out standout best call, though some of these markets I did okay in, the Dow Jones Industrial Average I did absolutely fantastic in. And I expected a first half low of 15,500. It got to 15,370. So I missed that by 130 points as far as the expected low on the Dow Jones Industrial Average. My expected high was 18,150. It got up to 18,137. Can you imagine that? 13 points is how much I missed the high by. So I missed the low by 130 points. I missed the high by only 13 points. So fantastic as far as the Dow Jones Industrial Average goes, and my sense about the stock market as a whole. So overall, last year, not so good, with some good catches as far as the major markets and some decent calls as far as what I thought were going to be the riskiest stocks of the year. And we'll call this a subpar year for me as far as the longer term. But I know I'm going to do better as far as the coming markets. And I'll be right back, and I will bring you my predictions for the coming year. So as we look at what might happen in the next year as far as stocks and the markets go, Like I said, I like to look at themes, and also I look at the charts, of course, and I look at valuations when I start to look at what I think will be the best and riskiest stocks for the coming year. Also use that kind of thought process when I think about the markets as a whole, but use a lot more cyclicality, I think, as far as the charts go, as far as looking at what I think that the markets will do. So it's hard not to think about this coming year as far as the political background that we're facing. I'm not about to make this a political discussion, and I'd be too crazy to try to pick who is going to come out of that huge number of candidates still on the Republican side. So I don't think that I want to pick or even pick who the president's going to be. More about what the influences about that come from the election process and how that might affect the markets. So I think that the political background is going to negatively affect some groups that have done well. As far as the healthcare goes, especially the HMOs, I think there's a lot of risk in that group. Hillary Clinton is really pointing fingers at it, and I think that she's going to be certainly in the lead as far as the Democrats go, and without any doubt get the nomination. So I think healthcare will be in trouble. Another theme, I think, as far as geopolitically goes, I think that this is going to be a bad year for ISIS, and with them losing ground and the discussions heating up about the deficits and debt, I don't think it's going to be a favorable year for defense either. So that's kind of those themes that I have a sense for. The Fed, well, I think they're going to be very slow to raise interest rates this year. And that's going to be a good environment for commodities, much better than we've seen. The anticipation of interest rates going up and the strong dollar, I think, is behind us. And that's going to be a better environment for commodities. I think the world economy still will be slow, but I think that the commodity markets will do better despite that. Eurozone, if you look at Germany, their short-term interest rates at minus 33 1/100ths. I think that the NERP, negative interest rate policy, is going to disappear this year in Europe, and that is going to be negative also for the dollar. And so that surprise, I think, will be that the dollar has a bad year and maybe the beginning of a very bad longer-term period for the dollar. That, of course, is better for gold and silver, and I think that they will have a better year. So I'm going to be repeating a theme that I got wrong last year, and I don't often do that, but in this case, I think it does set up nicely as far as that goes. And one more comment about the overall markets. I think if it comes down, well, I think by the end of Super Tuesday, I think we'll probably have 6 or 7 Republicans left in the race. But if it comes down to Hillary and Donald at the end, I do not think that investors are going to be very happy about that situation. So if it comes down to that, I think we're going to see softer markets. And I think overall, you're going to see that that's reflected in my thought about the market. So let's now talk about the best 12 stocks, my best dozen stocks for the coming year, and I'll give you a little hint about why I like each of these and why I think that they're going to have performance better than the market in the coming year. So let's take a look at my list of my favorite stocks for this coming year, my best dozen. And here you can see Slim's favorite dozen for 2016. Here, let's just go over why I like these stocks. VA, that's Virgin Atlantic. I think it's maybe one of the best growing airlines out there. It has a super low PE, like 8. They really are executing well. Man, anything comes out about them expanding as far as where they're flying to, and I think the stock could fly. I really like that one. Deere, Caterpillar, well, they're in this category of I think we're going to have a better year for ags. I'm thinking that we're going to see grains do better overall. So the cat is in the category of a dog of the Dow. Dow, and those stocks often do better. So a favorable mention in that group for as far as the ags would be potash. I don't have it on my list, but it's also not a bad one that could get a pretty good pop. Now, this returning theme about gold and silver, I do believe it's going to be a better year for gold and silver this year, and I'll show you that as we get into my predictions for the individual markets. So silver, PAAS, Pan American, they have they're one of the better leveraged and more efficient silver stocks as far as that goes. So it's silver and PAAS. As far as gold goes, I like GDX again. I think it's going to have the return year and do a lot better. And Newmont, probably one of the more efficient gold miners with good reserves. So I think that has a good opportunity. And favorable mention in that group, I want to say FCX, as copper and gold, I think, do have rebounds this year. So I think that those are a good place to start. Now, KB Home. The reason I picked this one is that even though I think that real estate overall is not going to have a fantastic year, I still think interest rates are going to rise very slowly. And it's not going to push mortgage rates up that fast. And I think KBH is the cheapest of the group and has a good chance of having a decent rally in there for the year. Now, another return one is CSIQ. We've seen a big move up in the solar stocks recently, and I think that they're poised for another good year. CSIQ is very cheap. It trades a lot with China, though it's a Canadian stock. They have big holdings in China, and I think if China gets a reasonable bounce, CSIQ will do very well, even maybe without China. Xilinx, this is, remember Altair got taken over. This is in a similar group, trades a lot like that stock used to, and I think Xilinx is set up really for a great year. Now, semiconductor equipment, semiconductor material stocks, KLA Tencor, of course, gets taken over. LRCX has got a fantastic pattern, and Applied Materials really looks like it's set up to have a good year. And this stock, which has been one I have hated all along because I have not liked their model, is Twitter. Now, Twitter is a stock that I think is going to attract a lot of interest during this year. They have 307 million monthly users, and that is an unbelievable platform at this price that no company is really going to be able to duplicate. So I think Twitter is a target, and I think Twitter is going to do really good in this next year as far as recovering. Let's hope that they make some good inroads as far as doing some things to their platform that have a possibility of improving that company overall, and I think that could be one of the big gainers for the year in Twitter. So a full disclosure, I'm not long any of those right now. I tend to get pretty flat towards the end of the year, but I certainly will be pretty soon. So the next group we're going to look at, we'll call my dirty dozen. That's the stocks that I think have the biggest risk for the coming year. So the first one there is Federal Express. Now, I mentioned Amazon earlier. Amazon is, I think, killing this group. They are, doing their own type of independent shipping, and UPS had a big hit based on that. I still think UPS has a lot of risk, and I think Federal Express is going to have a rough time this year. Triple M, I think, is overpriced. Now, they guided down. The stock rebounded after that. They're at a 19 PE. Forward PE, that's expensive for this stock if you ask me, and I think Triple M, in a group of stocks in the conglomerates, is the riskiest of those conglomerate stocks. GE, Honeywell, I think they have better patterns, though I wouldn't buy those either here, but Triple M, I think, has got a lot of risk. General Dynamics, well, I think it's put in a major top. Head and Shoulders, I think the background for the defense category is going to be weak this year, and I think that we're going to see these stocks have trouble. Lockheed Martin also has a pretty bad pattern, and I think that those stocks are topping. Panera, now this one has got a 33 PE. Now, it's really gotten helped by the troubles in Chipotle, figuring that, well, investors are figuring, well, if Chipotle has got all these health problems and Panera remains clean, people are going to go there instead. I think it is massively overpriced. And I could see Panera losing a lot of ground in this coming year, especially if Chipotle stabilizes. I think McDonald's is in the category also. I didn't list it here, but it gets favorable mention as a negative because it is, I think, massively overpriced for that stock. And the fact that they were doing all-day breakfast, I mean, forget about it. That's not going to make that big a difference for that company. And I think that one has risk too. So, but Panera is the one I listed here as having the most risk in the group. Now, back to the political discussion that I had mentioned, I think that the HMOs, the whole healthcare category, is going to have a lot of trouble in the coming year. Humana, to me, has got the worst pattern. Really, as far as valuation goes, I think this one could get hit the most. But also, Celgene in the category of the biotechs, I think is also pretty good risk. Second highest PE in the group, and also a lot of commentary about their pricing structures. And there's going to be a lot of political pressure on there. Regeneron, just a favorable mention, REGN, is the highest priced of all those biotechs, crazy high priced. And that one probably has a lot of risk also, but it's such an expensive stock. I would rather be involved in Celgene. Now, in the category of retail, I've got three on here. JCPenney, I think, is going to be filing bankruptcy in the next couple of years. That's my guess. And I see this as a sub $2 stock. I've been saying that for a long time when it was even $14. Now it's come down a significantly large amount. I don't think this company gets rescued. I don't think they can execute in this world. So JCPenney, I think it's going sub $2, and it may be in the next year. Costco, I think a major top is in there, really high price, 26 PE for 2016, the forward PE, and that looks like a major top coming into place. Dollar Tree's got a very negative cyclical pattern, and it really broke. It's got high valuations, and it rebounded right into some major resistance. This is the kind of pattern that I think has a chance of retreating all the way back to its recent lows, and I think it's got a lot of trouble. IBM, that one is a returner as far as the stocks on the list. It did poorly last year. It really is not competing in this world of the cloud. They have not been able to execute at all. The negative cyclical patterns that I look at say this stock is going to have a lot of trouble. I really see it sub 120, maybe $100 down the road, as I think it has a lot of problems going out there. Now, Netflix. Now, Netflix is, this enormously priced stock. It's all based on, well, the fact that they have the potential for big international growth. They've been able to grow subscribers. They've raised their prices. Last time they did that, the stock collapsed. This time seems to be holding up on that. The real problem for them is Amazon. Amazon Prime, a huge competitor to them. They sold all of these Amazon Prime memberships, and they're going to continue to do that as they grow their subscribers in their massive ecosystem. I think it's a huge problem for Netflix. They're planning to earn, estimated to earn 26 cents in the next year. A company like this, priced at this level, it just can't make a mistake. And I think it's going to, and I think you'll see Netflix get a really big hit on the downside. As far as Trip goes, I think that's got the worst pattern in the group, the least possibility for growth in there. So I think Trip is going to have a pretty good move on the downside. So that is my riskiest 30 dozen stocks for 2016. Now, next thing we're going to look at as we wrap up this show is my calls for the markets in the coming year. So I kind of broke this down. I don't really normally pick closing prices. I think that's kind of insanity. What I like to do is look at the broader patterns and say what I think will happen, like in the first half of the year, the second half of the year, and pick the highs and lows and see how the wave patterns work. That's really the way I do it when I look at markets. And then I pick the levels based on where I think these highs and lows are going to be, and that's what I'm going to share with you right now. So the first market that I'm going to talk about is the oil market. Oil market, I expect to have a first quarter low and a high in the fourth quarter. So in other words, I'm looking for the way the patterns look is maybe a low in somewhere January, February, and then probably not a big year, but moving up during the year. So let's take a look as we look at oil and these other highs and lows of what I think is going to happen in these markets in the coming year. So here you can see oil, Q1 low of 33.40, a Q4 high of 50.80. That's what I'm looking for this year as we get some modest bounce in there. As far as the gold market goes, looking for a low in gold in the first quarter. I think it's going to be early. I don't think it's going much below the level it is right now. So I'm giving it a low of 1060. Maybe it slips by a little bit by that, but I don't think it's going to get much lower than that. And we're looking for, I'm going to call this a modest call, because there are a lot of gold bugs out there that think gold's going a lot higher. I don't think the environment is going to be set up for that in the coming year, though I think this is a year that it turns the corner, and we could be looking at much, much higher prices in the next 3 to 5 years in gold, but we're only going to look for a high in Q3 of 1252 in gold. As far as the dollar goes, it's going to be an opposite call for me, right? Where I'm looking for the high for the year essentially to come in the first quarter, opposite of what we're looking for in gold. So I think it's going to start out high, maybe 102.50, and then spend the rest of the year in trouble. And I'm looking for a low in the third quarter of around 90. So I think it's going to lose around 10% of its value this year. And that could be somewhat upsetting to the markets. But the international stocks, if I'm right, they're going to like that, the lower price of the dollar. And I think a lot of that is based on my thought on interest rates, where I don't think that they're going to go up all that significantly, though I think we'll see some decent swings in the market. We're going to look for the low to come as far as the 10 years in Q3, the high to come in the beginning part of the year in Q1. I'm not looking for it to get much higher at all. 127.21, the high being in the 10-year note, and then in that third quarter declining down to 114.20. That's probably going to equate to a 330, 340 yield in the 10-year, and that's probably what I think in the third quarter we're going to see as the peak in interest rates for the year at that time, as I think that at that point the bond markets will be overpricing or over anticipating the increases in interest rates there. Now here it is for the Dow Jones Industrial Average. Now this is an interesting call. I expect the high of the year and the low of the year to both happen in the first quarter. How's that for a call? So a very volatile first quarter, whereas we don't get much higher than the levels we are now. 17,790 is the high that I'm looking for in Q1, and then looking for Q1 decline all the way down to 14,690. So you can see I'm looking for a large decline, and I've been talking about that all the way into this February-March period that's coming up in here. So looking for a pretty big failure. That's a pretty bold call, and I think the rest of the year it trades pretty much in that range as we get all of this gyrations and discussion and craziness in this political environment that we're in. So that is my predictions for 2016. We'll see in a year how well that's gone. And I certainly hope that the stock calls, for those of you that are longer-term investors, you find some good entries there and are able to do some buy and hold, maybe some covered rights and those kind of positions in there if you're a person that only does some investing. So there's something there for everybody. That is the end of the special market week. I hope that you found it interesting. Always like that and I get a lot of emails about the fact that, when I'm wrong, I own up to it, and when I'm right, well, I like to celebrate it. And that kind of makes me right on both cases, right? Because what we want to do is look for where the struggles are, figure out what went wrong, what didn't go as we expected, and then try to improve on it in the coming year. And this coming year, I really am wishing all of you a great year, everything happy and healthy for you and all of your families. You've all been amazing supporters. askSlim.com has really grown nicely. This was a big transitionary year for me as I left the network I was with and came to do this on my own. And so many of you followed me, and I've got lots of viewers and great support from you all. So again, I hope this is a great year for you. That is it for the week. That's it for the year. And I am always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.